Listen, in this video, I'm gonna share with you guys the top 4 things that you need to be doing in 2023 if you want to kill it in the real estate game. All right. Now make sure you watch to the end because all 4 of these things are going to be extremely critical if you want to be successful. Now, number one is you got to learn how to invest remotely. Why is that? Because depending on your marketplace, the recession will affect your region differently. Okay, we are in a recession, believe it or not. And some people are going to be affected differently than others. So like here, I live in Orlando. I don't think this market is ever going to really see the bottom, quote unquote, right? I think we've already seen the transactions crash. I think we've seen the worst of it. We're going to recover pretty quick. In other sectors, though, that won't be the case because of their economy makeup. Florida, tourist destination. So we constantly have people coming here globally, right? Now, this is why it's important, though. You never want to be relegated to the looks that your marketplace gives you. What does that mean? So I'll give you an example. I teach people how to build 6 and 7 figure real estate businesses all over the world, okay? One of our students, Xavier, is down in Miami, and he was doing flips down there, making money, but then the market dried up. He didn't get his next deal for like 4 months. So we talked about it on a coaching call, and I encouraged him. I said, you got to get out and learn how to invest remotely, right? You already know what to do. You just need to implement. So he went out, he found a marketplace in Michigan, small city in upper Michigan. He started investing there. He did 3 deals in a matter of like 90 days, right? He was stagnant for 4 months prior, and that probably would have continued to been the case, as it will be for most of you if you don't learn how to pivot and take advantage of investing remotely, all right? So another thing that you need to consider is wealth is built at the bottom of the economy, right? Wealth is built at the bottom of the market. And so much like, 2008 to 10, when I bought over 20 rental properties back then, that was at the bottom of the market, right? I since then now own over 100 apartments and whatnot. But the point is that the last 7 deals that I did of 2022, I got for deep discounts, somewhere between 15 and 20%, okay, below what they were asking. And this was from the span of June to December, okay, so the last 6 months of the year. That opportunity is going to be that on steroids through the first couple of quarters of 2023. And it's important that you're able to pivot and go into other marketplaces and take advantage of what they have to offer, okay? Now, at the end of this video, I'm gonna give you guys a free resource, okay? So make sure you hang on. And also, if you like this content, click the subscribe button, okay? Now, so number 1 is you need to learn how to invest remotely. Number two is you need to learn how to raise other people's money, okay? This is gonna be extremely critical. You can only scale your business to the level in which you can raise capital, okay? I don't care who you are, at some point you're gonna be cash strapped. Even if you got 300 grand sitting in the bank, if you go put that in one deal, then guess what? That money is stuck there until further notice when the deal is done. Not necessarily a bad thing, but definitely not the most optimal predicament either, okay? So you wanna be in a situation where you know how to go out and network and form relationships and raise capital from other investors. There's more money on the sidelines than there's ever been in recent years because so many of the different marketplaces are volatile, right? Stock market has been volatile. Crypto, we know what happened there. So it's really important that you can go out and network and form these strategic partnerships to get a capital infusion in your business, create partnerships, and then go out and really grow and scale your business to the level that you want to scale it, okay? Now, even if you have funds sitting in a 401k, a IRA, and I would consider that to be other people's money. Here's why. Because other people are really deploying your capital, right? So it's almost like it's not your money. We need to change the narrative and take control of that, though, right? It's our responsibility to go out and build the acumen up to where we can find better ways to invest our money instead of, again, being relegated and kind of at the behest of other subject matter experts to deploy your money into the stock market and then send you a statement showing that you're down 20%, right? With no recourse. So at least I like to have a little more control over my destiny. And so the more that you become proficient at raising capital or deploying some of your other capital in different investment vehicles, the more successful that you will be in this business, okay? Now, back in 2008, as I shared, I was 24, 25 years old, 2008 to 10, where I bought over 20 rental properties. When the market was contracted this last time, I was doing that out of my own pocket. Okay. I had started out lending money when I was in college. I started from a $6,000 refund check in 2006. That's how I got started in this business. And then from there, built up liquidity. So when the market contracted, I bought a bunch of properties at the bottom of the market. The problem though was I wasn't educated. I had no mentorship, nobody advising me on the proper way to do it. I was just being opportunistic, right? And fortunately, things were so cheap back then that, I mean, you could trip and stumble into money back then if you had some, right? But the problem though was I didn't plan for a rainy day. So these properties started needing roofs and HVACs and, um, you know, basement dig ups, right? All these heavy pieces in terms of repairs that I didn't plan for. And so I didn't know how to go out and raise capital at that time and create partnerships. And so I ended up selling off that portfolio in a down market. I refused to be a slumlord. And so I ended up parting ways with 90% of that portfolio in 2013, 14, 15. Well, had I kept that same portfolio until the start of COVID, I would have exited and made over 2 million bucks, right? So I got to saying that ignorance is expensive and we can't afford it. So your ability to be successful in this business will be predicated on two things: your education, right? You only can go as far as your acumen can take you. And two, your ability to raise capital, right? Those are two primary things that's incumbent upon you to go out and figure out if you want to be successful, and even more so in 2023. Because again, many markets will see the bottom and wealth is built at the bottom of the market. All right. Number three, you got to get really good at analyzing deals. Your ability to go out and underwrite deals is paramount. Okay. There's going to be a lot of deals that seem like they're good deals right now that aren't. There's going to be other deals that seem like they are not good deals that are, if you know how to properly underwrite deals, understanding what the ARV is, the after repair value synonymous with the projected sales price, along with really getting good and intentional and prudent about contractor bids, right? Number one, how to analyze those, but two, how to also evaluate and come up with your own rehab. Okay. Critical pieces that we teach in our program for that very reason, because while you may go out and get three bids, you need to be that fourth one. And in order for you to do that, then you got to have the acumen and the wherewithal and the know-how to do so. All right. It's another important piece that I want to bring up about rehabs, because rehab costs are still fluctuating. It was extremely difficult to figure out a rehab during those 2 years where we were having a lot of issues with import, export, material shortages and such. The material shortages aren't as much, as coming more cyclical, right? I do large apartment building rehabs, and so I see it in tranches in different areas. But the point is that you need to make sure you got a good variance allowance in your rehab budget. All right. So make sure you got at least a 10% minimum in your rehab budgets as you go into 2023. All right. So number one, you got to make sure you learn how to invest remotely. Number two, you have to get really good at raising other people's money. And number three, you got to get really good at analyzing deals. Now, as promised, I said it was four things, and here's the fourth one. Okay. Do not buy deals that only have equity. What do I mean by that? Okay. There's some investors that take a market like New York, for instance, right? Very challenging market to get good return on investments unless you got a lot of money. Okay. Because the cost of real estate is just so high, and there's not a lot of equity unless you go into gentrified neighborhoods. Right. And so a lot of investors there, they buy for equity, not cash flow, because they know the deals won't cash flow because the cost of real estate is so expensive. You just can't rent that thing high enough in order to make the deal make sense. Now, I'm not saying that that's not a good business model. That's not the most optimal business model, in my opinion. It has not been for me over the last 16 years. You want to make sure when you go into 2023 that you are not buying deals just based on equity, particularly because the market is still sliding the opposite direction. So if you're buying a deal today that you think you may have $50,000 in equity because you bought it at 250 and it's worth 300, well, what happens when 2 months from now interest rates go up and sales decline and that property is now worth 240? Well, you upside down. And guess what? It's over 300,000 people in America that are upside down right now that bought houses in 2022 for this very reason that I'm telling you, do not do this in 2023. Okay. So make sure your deals cash flow day one, right? So go out there. Oh, as promised, free resource. Okay, free resource for you guys that want to start learning how to go and invest in real estate remotely. Bestplaces.net is a wealth of information. Okay, bestplaces.net is something that we use inside our program. And I can't give it all to you today, right? It's over an hour-long course inside of our program that we teach. But go to bestplaces.net. You want to look at housing stats and just go through there, and it'll start to tell you different makeups and demographics of a market. So as a quick example, if you go into a marketplace that is 60% renters, right, and 40% homeowners, then what would that tell you? It may be more advantageous to buy cash flow in that market because that's what the makeup of the market is, right? But if in the event that there's more home ownership in that market, then it may be more advantageous for you to go in there and flip. So those are just like some key points and metrics that you can look at. But please go out and implement these strategies. You absolutely will be able to be successful in 2023 if you follow these 4 things that you must do.